You've successfully raised $100 million.
Do this for 5 years, cash out, rewarding a career, but also like make a lot of money. And it was like, wow, I couldn't believe it.
That really changed my modality around like money and business, telling them that they owe like $5 million in taxes.
I don't want this life. What you're motivated by is not what I'm motivated by.
No.
If that's where your selling point starts at, are going to be the first ones that kind of get. There's an AI agent, for example, that can do that work.
Yep.
CEOs interacting with an AI CFO, then why is there a CEO?
Hello. Welcome back to the channel, everyone. And welcome to the first episode of my podcast, or I guess you could call this the soft launch of my podcast. So podcast is something that I've actually been wanting to do for a long time now. It's always kind of been in the back of my mind. And I think now is kind of like the perfect time to add it. And so, I thought a podcast is just a great way to bring people together, create new conversations. And we'll see where it goes from here. When I first left corporate, one of my earlier struggles is just not feeling like I didn't really have a ton of understanding from people around me or support for what I was doing. And so I want to use this podcast to try to inspire people. So whether you follow me for personal finance content, or you're somebody who currently works at a 9-to-5 and you're looking to leave your 9-to-5 and become an entrepreneur, a YouTuber, or a podcaster yourself, I hope this podcast gives you some inspiration on how you can move forward. So I know a big part of my audience are finance and accounting professionals. I thought that bringing on today's guest would be a great start or a great kickoff. So I'm excited to invite Pav Manchanda, who is also a CPA himself. Pav and I have worked together in the past. He's a peer of mine. Pav is the owner and founder of Clearbooks Technology, which is an accounting firm that specializes in helping startups scale their finance functions. He works with startups ranging anywhere from 1 million to 10 million in revenue, and he has successfully raised 100 million in his career for businesses that he's worked with. He started his career off in Big Four, and then he went into industry, and he has 15 years of really valuable work experience that we're going to talk about today. I will leave the details down in the description below of how you can reach out to Pav if you'd like to connect with him. But yeah, welcome.
Thank you. Thank you. That was great.
Thank you for being my guinea pig, by the way.
This. I'm so happy to be.
Yeah?
Yeah. No,
I know that you've been talking about wanting to do a podcast for a while.
Yeah.
Have you done any in the past?
I've done one when I first started Clearbooks. It was kind of like, I wanted to get on some podcasts, get out there. But I think ever since then, I haven't really felt anything really right. I did consider like, okay, I might do my own.
Yeah.
And I think similar to you, I was like, I'll just kind of talk by myself.
Yeah. Yeah.
But I think realistically, like I like the idea of having it with someone else.
I think so too. I think it's more natural, like more stimulation and conversation. I do a lot of talking by myself on YouTube, and sometimes I feel like, I'm running out of things to say, or like I don't know what to say. But when there's another person, it's more of a conversation. It's more natural.
Right. You can get that validation right away in terms of like what you're saying and all that. So,
yeah, exactly. I studied a couple of podcasts. Mm-hmm. Kind of before today, and I was kind of just thinking like, I was thinking to myself like, what makes a good podcast? I don't know. What do you think? Like,
what I think it has to be a mixture of informative and like authenticity, right?
Yeah.
Like you don't want I find I start tuning out a podcast where it's just like someone just lecturing you the whole time.
Yeah, for sure.
This is what you should do. You should wake up at this time if you want balance. All these things.
Sometimes I do that.
Yeah.
A little bit. So
yeah. Well, you do it like in your content, which makes sense.
Yeah.
But with podcasts, I think there's still a way to give information, but it come off authentic. And I really do like the life experience, and that's why I was excited to do this with you. It's like we can focus on just what our experience has been, and hopefully that helps somebody.
I personally like podcasts that are a little bit more like conversational style, but that aren't like, I guess, just not like someone rambling. Like I tune out when people just ramble on and on and on and on without like a end point. Mm-hmm. So I think like a balance of conversation and structure at the same time is what I like when I listen to other podcasts. So you and I have a pretty similar background and upbringing.
Yeah.
Yeah, like we're both Asian.
Yeah.
We both grew up in immigrant families.
Yeah.
And we both went into accounting and studied accounting in school, and then we kind of pursued our career in accounting. Yeah. So why don't you tell us a little bit about just yourself and your story and what has brought you here to today?
Yeah. I won't give too much detail about my upbringing, but, grew up in a small town on Vancouver Island. And we had, my dad worked in a mill. My mom was a stay-at-home mom. I had 2 siblings, and it was always ingrained in us to, we've left our home country to make a better life for you. And a better life was always okay. I have to do better than working in a sawmill. And that's kind of how I kind of navigated my career choices. Was like, okay, I gotta do well in school. You know, that was instilled. And I say navigated, but it's a lot of pressure from parents as well. Like,
Are you
gotta go to university.
Oldest or?
I'm the middle. So I have an older sister and a younger brother. And my older sister went into engineering.
Yes.
And,
very smart.
Yeah, exactly. So she went that route, and then I was like, okay, early on I knew I liked math. I asked my math teacher, and math is also, I liked math because it was like, okay, I'm not going to like the art class, It was just like, it was very much, again, about the upbringing that kind of made you go towards these subjects and try to do better in these subjects. And I remember asking like a grade 8 math teacher, I'm like, if I like math, like what kind of career do I do? And he said accounting, and I was like counting? Like, I have no idea what that means. And so, it was until grade 10 that I actually took an accounting class, figured out what it was.
That's when I got started with accounting too.
Yeah.
Like grade 11, school, grade 12. Yeah, high school. That's when you start learning.
Yeah.
That was my first exposure to accounting. Because prior to that, you don't learn it when you're like in elementary school.
Right.
I never knew what accounting was growing up.
Yeah.
Like growing up, Asian parents, they just want, well, at least my mom, she was like, you're going to be a doctor or a lawyer.
Yeah.
Right?
Yeah.
And I was like, I hate science. I'm not a science person. Like, don't ask me anything about science. But I'm okay with numbers. But I mentioned this before. Like, I wanted to actually go to law school when I was younger. But I found out that
younger, as in like high school age or before high school?
No, like really young. Like really? When I was really young, I was like, I'm going to be a lawyer one day. I kind of have that like feisty like personality, right?
Yeah.
Like, do it this way. Don't do it that way.
Yeah.
It's hard in Vancouver, like getting into UBC for law school.
Yeah. So you actually tried to, or did you figure?
I kind of tried to. I don't know if I tried that hard.
Yeah.
Like, you know what I mean? Like I probably could have tried harder. But the LSAT was hard for me.
Yeah.
And
so like you really tried.
I did one attempt. I tried-ish, but I didn't really. And then recruit came along.
Okay.
Right? And like accounting and recruit, and everyone was like going into accounting. I was like, I'll just do this instead.
Right. Okay.
Yeah.
Cool.
Before we get into the rest of the podcast, I want to thank the sponsor for today's video, Gamma. Gamma is your AI design partner for social media posts, websites, presentations, and more. With Gamma, you are able to make beautiful presentations without spending hours and hours designing slide decks and presentations yourself. Gamma is a Silicon Valley-based tech startup. They've raised $20 million in funding since they first started. So back when Pav and I were in school, or even before AI came out, we used to have to design PowerPoints and slide decks and presentations ourselves. And so with a tool like Gamma, I can just focus on the material itself and let Gamma handle the design aspect of what I'm creating. Now, of course, with any AI-based tool, this will save you a ton of time, but also a ton of stress as well, and just making sure that your presentations or your PowerPoints are really aesthetic. Gamma allows you to turn your current information into a very visually stunning PowerPoint or presentation in a very short amount of time. And the great thing about Gamma is that they also have AI built in, and they can do the brainstorming in terms of the material for you as well. So whether you are preparing presentations for a town hall, an ELT meeting, a school presentation, or you're creating social media posts, Gamma has an answer for you. Gamma can also help you create websites as well, landing pages with no coding required. Gamma has a very clean user interface. They leverage most of the advanced AI models right now on their platform, and they also offer API integration as well. If you're interested in signing up for Gamma, they do offer a free trial, and I will leave my registration link down in the description box below. Now let's get back to the podcast.
You went to UBC, I think,
yes,
right?
Yes, I went to UBC,
And what did you do to start at UBC?
Business. I went to business school right away.
Oh, okay.
Yeah.
To 4-year degree in business.
Yes.
Okay.
Yeah. What about you?
I did BCIT.
BCIT.
Yeah. And
was it business as well?
It was the financial management program. And back then when I took it, it was only full-time for 2 years. And then after that, it was...
It's a pretty vigorous program,
part-time.
right?
Like, yeah, first 2 years is intense, but it's all core classes. Like you're not doing like a sociology or like a soft skill class at all. It's all tax, finance, accounting, and you're hitting like core classes and then some business communications classes as well. And so that's the softest it really gets is like, here's how to write an email.
Yeah.
And so the first 2 years, very intense in that sense. And then after that, everyone just started working and you would go into like a part-time, you'd start doing night classes at BCIT and work during the day. And so
that's hard.
Yeah.
I always found that to be hard.
Yeah. And the pace you have to go to still, that was the other, like there's that pressure from the family. They're like, okay, when are you going to finish your degree now? Right. And so I like timed it out, and it was like, okay, I got to do like 2 to 3 classes each semester, in night school to graduate within like 5 years of having started this. And my parents expect me to have a degree after 5 years.
Yeah.
And that's all you're kind of thinking of at that time. And so I would take on like 2 to 3 classes at a time, and then work full time during the day. So it would be like a typical day would look like, and it was usually Tuesday and Thursday classes, and then I'd pick up a Saturday class because wanted something on the weekend. And so typical day of work would be start work at 8 or 9, whatever time that was, leave work at 5, class would start at 6 and go till 10, sometimes 9.
Yeah, those are long days.
Yeah, long days, but you're like early 20s. You have
that's true. School and work is like doing both of them is hard though.
Yeah, it is, but it also kind of helped. And that was kind of the first job I took out of BCIT was with a video game company.
Yes, Ubisoft.
Ubisoft. Yeah, exactly. They were Radical Entertainment at the time.
Okay.
And then eventually they were owned by Vivendi down in LA, and then eventually sold to Ubisoft. So it's kind of, they moved around, and then now they don't exist anymore. But
right. So Ubisoft is the company that's developed games like Assassin's Creed and the Tom Clancy games, right?
Yeah,
exactly. They're huge.
Yeah, and then at the time that I was there, they were doing a game called Prototype, which was really cool. Like it was just all shot in. It was set in New York, so I got to watch the development of the games, which was really cool. Like I would get to test out for bugs. I would see the invoices come through.
Yeah, how do video games work?
Yeah, they're all milestones, which is kind of similar to accounting. They're all working towards these milestones and deadlines. And I mean, the coolest thing I remember is, because I worked in accounts payable, so all the expenses would come through to me that the studio was incurring. But I remember one time there was a team that went out to New York because they were making the Prototype video game, which was set in New York. And their whole thing was just to record the sounds of New York City so they can put them in the video game. And so they were walking around different parts of the city recording, and I was like, oh, that totally makes sense that you would do that. But you don't think of that when you're playing the video game, that it's these guys actually went to New York City to figure this out.
Video games are so advanced now compared to what they were when like when we were young. Like I remember playing Pokemon Yellow. That was like my first video game. It was like, I think it's black and white.
Yeah. And this time, when I was working there, it was 2006. So I think PS2 had just come out. Oh no, PS3. Yeah, PS3 had just come out. And so
we have a PS5 at home.
Yeah. The last video game console I owned was PS2. Because then school took over. I'm like, if I have a video game, I'm going to be playing Grand Theft Auto like 5-6 hours a day. I just need to not have a video game console. And I thought, okay, I'll buy one now. I still haven't bought one, but it's always been in the back of my mind. But yeah, when I was working there and going to school, I was doing a lot of classes that were at that point were technically like third year, and were getting a lot harder. Like we were getting into like advanced accounting, advanced audit, and these classes. My job that I was doing, I was just working as an AP person.
Yeah. It's very different, school and work. That experience that you had. That role was very different. Like in terms of like, I couldn't apply really anything to like, because you're just processing invoices.
Yeah,
right?
And I'm spending 8 hours working. It should have some sort of like experience that then I can like go, I don't have to study as hard at night, was kind of the thought I had.
Yeah.
Like if I'm here for 8 hours, I need to be learning so that I can go into class and already kind of know some of this stuff. But it was just like 8 hours of work doing AP, and then going into class and it just being like, this is so much more advanced than any of the work I'm
doing. My first role was like AP. Well, it was like internship style role, like junior accountant. They just had me like punching in expenses.
Yeah.
And I was doing this for like 8 hours a day, like doing bank reconciliations, like all manual too.
Yeah, totally.
And I think now with like technology, it's like much faster. I don't know. Like I'm sure there's, we can use AI now to do some of the coding and the automations and stuff like that. But back then it was like punching things in manually one by one.
Yeah.
And not really being able to see the full picture of accounting in general, because you're just coding invoices. Like that's not, you know what I mean? It's pretty basic.
Yeah. It's so basic. And I mean, like what was your feeling when you first started doing like accounting work, from like what you learned and then all of a sudden you have your first job?
I don't know. It's just like, this is definitely not what you're learning in school.
Yeah.
And it's also really boring, I guess, in a sense, like just data entry. And like, yeah, I remember just like reconciling bank accounts. Yeah. And that was just like it. And then, you know what I mean? I remember one time I got so frustrated, I just like plugged something in really random to like make the bank reconcile. Yeah. You know, when you're like a junior and you're like, you don't know what you're doing, you're like, hopefully no one catches this. And you just like plug it in.
It's like, what's the biggest number? AR.
Yeah. It was just and just like pretend like you don't really know what you're doing. Yeah. That was my experience as well in AP, which leads us to like, that compared to working for a firm. Yeah. So you were with Deloitte. You started your career off there. Yeah. Tell us a little bit about how you got into Deloitte and whether you participate in the recruiting cycle. And
I did. I did go to the recruiting sessions, and maybe this was foreshadowing, but I went to the recruiting sessions at our school, and I really didn't like it. Like the one thing I didn't like.
It's a little intense.
It's not that. It's just like because the firms send like their first years, second years, right? And those first and second years come to the school with such a chip on their shoulder of like, oh no, they're dressed in suits and they're kind of like, you need to, this is when you talk to the, and you're just like, okay, sure. Like you're like a year ahead of me. You're not that.
They've made it in life.
They're just like, they're like, talking about their pinstripe suits and all that. And I'm not knocking it because that's like, I was like, I want this. Yeah. But the recruitment events themselves, like going to it, I was like, this isn't, I don't think that, first of all, my grades aren't that high. I was always kind of like medium grades. If you look at my grades all the way from like grade 6 when we started getting A's and B's, they're all kind of B's, maybe an A, maybe a C plus, like B average. Yeah. And I was like, okay, I'm not gonna get directly hired into audit. So, and plus I hate these events, so I'm not gonna really go to. I went to one and then stopped doing that. And my goal was like, I'll look at other avenues and which way you can still have a rewarding career, but also like make a lot of money. Yeah. Because I was like, still like, I'm in this career to make money.
Yeah, of course.
That's what I wanted. And so, I started just looking at other avenues, focusing on just finishing, graduating. And then I was like, I'll look for jobs and I'll work in industry, as you would say. Yeah. But, again, that whole thing about not being able to apply, I was like, okay, I think I'm going to school with a lot of people that are at accounting firms. Yeah. And big 4 or small, medium sized. And I was like, they are way ahead of me. Yeah. So that same like thought was like, okay, if I'm going to be at work, I need to find a job that's going to be going into this. And so, when I saw a job posting, it was just a job posting for a US tax analyst at Deloitte. I had a friend who, her and I had a great relationship as we were going through BCIT. Yeah. And she was working at Deloitte, and I just hit her up. I'm like, hey, like, do you mind just like referring me to this job? And she's like, yeah, like whatever I can do to help. Yeah, so definitely like had someone help me. And she referred me and I got a job interview right away. Nice. And then I always had that confidence that if I get a job interview, I'll get the job. Yeah. It's just, I need to get the job interview. So, there was 2 or 3 interviews and got the job offer, and it was like, wow. I couldn't believe it. I still remember, I can't remember how they gave me the offer. I'm trying to remember. I think it was just an email of like, hey, you got the job, the package is on its way. And they mail you like a big package in the mail. Yeah. I remember calling, and I actually called the recruiter and I was like, hey, like, cause you had to send in your transcript. They still wanted my transcript.
Oh, did they?
And I thought that was the last stage. Yeah. I'm like, okay, they've done all the references. Oh shit, they want my transcript. I'm like, they're gonna look at my grades and they're gonna be like, no. And so I sent in the transcript, and then the email comes through and all this, and I like called the recruiter. I'm like, hey, I'm just like, did I get the job? And she's like, yeah, like I called you to tell you got the job, and then the email. And I'm like, yeah, but like I just sent in my transcript. And she's like, yeah, that's just to. Like, we want to make sure you graduated with what you said. Yeah. I was like, oh, okay.
Just doing their due diligence.
Yeah. So I was like surprised that I actually got it at that time.
Yeah. I mean, Deloitte is huge because you were there. I think around the years that my husband Kevin was there.
Yeah.
But I don't think you guys rubbed shoulders.
No.
Right? Because it's such a big firm and like people work in different departments and different like floors and stuff like that.
Yeah, we were very like US tax was very
just friends with people in US tax.
Yeah. Or
it's
like
very
the other
niche.
tax people.
It's very niche to know US tax when you're a Canadian.
Yeah. Yeah. And we were serving our Canadian domiciled companies with existence in the US. So a lot of like the restaurant groups were very common.
Like transfer pricing type stuff?
No, they just had restaurants down in the US as well. And they would have to have
corporate tax.
They would have filing requirements, but the head office was in Canada.
Yeah. It can be quite technical, I think, like cross-border type transactions. And
Yeah. And at that, like there was also like, hospitality was mainly what our clients ended up being because they'd start in Canada and then expand into their and start owning things in the US and have to file.
Yeah. My experience with Recruit is pretty interesting because I went through like the traditional recruiting cycle in my last year of university. Okay. So I only gave myself like one shot. And, I did the whole networking thing. I had a handful of interviews. It's kind of embarrassing to admit, but in the second round of one of my interviews, there was like this group assessment where it was like a group of people. And I guess they had us like on our computers. They like gave us a prompt. You know what I mean? Like they gave us a prompt and they like kind of pit us against each other to see like how we would act as a group and then also like how we would present our own answers.
Really?
And I swear to God, I had turned off my phone. Before. I swear to God, I turned off my phone before going into that room, but my phone started pinging and it went off.
Oh.
And, we were in the middle of the assessment and, my phone went off and, there's like these managers that are in the room and one of them makes eye contact with me and she gives me like the dirtiest look. She's like, you didn't get the job. I ended up getting a job with a mid-sized firm, which is sometimes like when you look back, you're like, I remember being kind of bitter about it for a few years. And then a couple of years later, I spoke with another firm and there was a position available, but it was non-audit. And they'd actually wanted me to switch because I was like already going down the audit route. They wanted me to switch to non-audit, but I didn't want to do it at the time because I really wanted audit. Because I feel like when you're going through the firm life and the firm experience, everyone wants audit, right?
Because that's kind of like partner. You want to be the audit partner.
Yeah. Which is funny in hindsight.
Yes, totally.
Because like I can technically sign an audit now, not that I ever would.
Yeah.
Right.
So you did UFI that route.
Yes. This is after the merger.
Oh, so
I qualified after the merger.
Oh, you did.
Yeah.
Oh, okay. Yeah. I'm aging myself, I guess. Yeah. I was.
No, Kevin wrote the UFI.
Kevin wrote the UFI. Yeah. It was. For us, it was the CG. I did the CGA at the time.
It's all the same now.
It's all the same now, but it was a lot different then.
Was it?
Yeah,
I don't know. I'm not
even.
It was a lot.
It was a lot different. I think now it's very similar to the UFI or the CA route. Yeah. More along that.
Yeah.
But CGA was easier to get. You didn't have to do the audit hours. You didn't have to. I think the exams were a lot more intense. And again, me knowing what I'm capable of, I was like, what's the fastest way for me to start making money? I
worked with a lot of really, really smart CGAs in my career. Yeah.
CGA was like, it was just more practical. And I just knew I was more of a practical person. Like I love business more than I loved accounting. And that's why I started my firm. So that's kind of why even what I really enjoy about my firm is that side of this stuff is the rest of the business.
Yeah. But before you started your firm, you had a period where you were actually a teacher.
Yeah. I was teaching at BCIT where I went to school, and I taught one of the classes, one class I had actually taken, and then another class that I was teaching was a newer class they had designed to teach finance, like general business finance to non-accountants, which was really fun, which really actually translated well into all my roles and also what I do now.
Yeah.
I'm working with founders who aren't accountants and trying to make them, not trying to make them, but just make accounting a little more interesting and connected to
easy to understand,
whatever they're thinking of, whatever their priority is.
Right.
Yeah. And being like, oh, there's this financial connection to it and helping them see that.
Yeah.
Yeah. So like when you started in public practice, what was like your first role?
It was the firm that I worked at the time was a mid-sized firm. And it was very unique actually. So I didn't end up getting the job at Big Four, but I got a role for a mid-sized firm, and it's a very unique experience because they actually specialized in like private equity and high net worth clients. And in hindsight, I'm actually pretty grateful for that experience because that really changed my modality around like money and business and stuff like that, right? Because it's like prior to that, like, growing up in like Asian immigrant background, like we didn't know any of that stuff, right? Like no one really taught us these things.
Like high net worth.
Yeah.
Like how to deal with money at that level.
Yeah. Dealing with money at that level, which is like a lot of tax planning.
Yeah.
Right. A lot of tax planning, a lot of like legal structures, like trusts, like just understanding stuff like that. But yeah, being like a 20-something-year-old kid out of university and then suddenly I'm, doing these like huge tax returns for people and telling them that they owe like 5 million in taxes, right? So that was like a pretty big jump. But yeah, it was through that route that I like even learned what private equity is. And like, and I guess for me now, like maybe down in the future, I want to be an investor myself, right?
Exactly.
Like that's the end goal, right?
Yeah, you could see that. Yeah. You can be like, okay, like I'm not going to make money to just buy a house.
Yeah.
That's like what we're taught is like, okay.
Yeah. Especially
money.
in Vancouver.
Yeah. And even now when I think about like, once you make money, like what am I going to do with it? It's always like house first is the thing that you think of buying first. But that's interesting. You saw like a whole different way to use your wealth.
Yeah, pretty much. I think it changed my modality a lot around like investing, like thinking, like making me think like an investor first. I think it's an experience I never would have got otherwise. Yeah, I mean, I think public practice in general it's a client-facing role, right? So you're dealing with clients. I did audit and tax, but I would say that, and you probably agree with me that like audit, public practice, like firms in general, that life is kind of an extension of university. Yeah. Right? Yeah. Where it's totally. Like everyone kind of has the same personality, the same end goal. Like
still hanging out with accountants.
Yeah, you're still hanging out with accountants, and everyone just has like the same direction. You know what I mean? Everyone's doing the same thing, has the same direction. And so it's easy to make friends in that way because you build this network of people that you know. But then once you go into industry, then things change a little bit. Yeah. Right.
Yeah, totally. I think you're exactly right in that experience at the Big Four is very much like college, and it benefits you because you are like still going to school. You got this big exam that you're going to write after 2-3 years. So I think it serves really well. But yeah, going into industry, it's totally different. The other thing that's interesting about what you and I both did was what you hear a lot about public practice is, okay, when you go to public practice, you can get a big variety of what you're going to be working on. You'll be working on.
Oh, it depends.
It depends.
It really
totally
depends,
does, right? And I was like, I don't want to say pigeonholed, but it was very much like US tax. Okay. That's all.
Yeah, because you can be stuck auditing like capital assets for like a whole year. Like if it's a really, really big client and you're literally like just doing cash and capital assets. Like
there's people with that. We also at Deloitte did tax provisions, massive tax provisions for our clients.
Oh, those are complex.
Yeah, and so I worked on one file for a brief period, but like the senior and the manager of that file were actually would be at the client's office for like 3-4 months and just working on these tax provisions, and we would rarely see them in our actual office. So it's like the variety really depends.
Yeah, it does really depend
what the firm is, and I think you really have to be you really have to advocate.
So what was your first role after leaving Big Four?
I actually I left Big Four and didn't work for 6 months because I was pretty exhausted from the nearly 2 years that I was at Deloitte. And I was actually at that time, wasn't sure if I wanted to be an accountant anymore, if this was right for me. And so I shouldn't say, like, it's not PTSD, but it was pretty rough. Like, you're kind of like, I don't want, like, I had this dream of becoming a partner at an accounting firm. I'm at the Big Four, and then 2 years later, you're like, I don't even want my manager's job.
Yeah, I think a lot of people go through the same thing as well, because you're like kind of, pitched that this is the path to go. It's so glamorous, and then you're like stuck doing all this work that as a junior accountant, right? That you don't necessarily love. And then being a senior isn't great either, because then now you have to like basically like take responsibility for all the stuff that you did in the previous 2 years and make sure that that people don't screw up and stuff like that. And
then you're like managing people on top of that, and budgets and all that. I was just like, no, I like, everyone I kind of saw that I was reporting to or was a senior, no knock on them, but I was just like, I don't want this life. Like it's what you're motivated by is not what I'm motivated by. They're also like, one example of it would be like the seniors had this little network with all the other Big Four seniors at the other firms, and they would go out to lunch, and I'm like, that's the last thing I want to do. I'd actually go and have lunch with the people, my friends from the video game company. Because I was like, why don't we hang out with, like, we're hanging out all day, like, with accountants. Let's go hang out with someone else, right? So I think when I decided to leave, I wasn't sure. I took 6 months off to finish my CPA or CGA at that time. And then I was like, I was talking to some other accountants and, again, people who had done public accounting, and they were like, why don't you give public accounting another chance? Maybe a smaller firm might be it. And so I did take a role with a smaller firm, but then got fired after 3 months.
What happened there?
It was just, I remember I think it just, something wasn't clicking for me. I wasn't doing a good
sometimes
job.
It's just like that.
I think I went from like doing tax prep to now putting together like NTRs and T2s, and I didn't make that connection as quickly as I feel like they wanted me to.
And we use the phrase accountant a lot, but there's so many sort of like specialties of work within accounting, right? Like we would know the difference, but I guess like for people who aren't in accounting, they think accountants all do one thing. They think, I think people like, oh, you're a CPA, you must know how to do tax.
Yeah.
Like, for example, like Kevin doesn't know how to do tax.
I don't either. I mean, US tax. US tax.
But I know Canadian tax a little bit because I did it. I only know it because I did it. You know what I mean? But otherwise, I wouldn't have known it. So, like, I think, like, having, in hindsight, like, having that breadth of experience of having tried different things is super valuable for people in their career that are starting, being open-minded to trying different things.
And that was it. I was like, okay, maybe I try a smaller firm that I can do the tax prep and a little bit of notice to reader, and maybe they'll give me an audit, because it was like a full service firm in that aspect. So I tried that route. They fired me, and I was like, okay. And I think even when I got the partner brought me into his office, and he was like, I just don't think you're wired for accounting. I was like, okay, well, just spent 6 months like trying to decide whether I was going to keep doing this. And then I try, and it's like, no. And I was like, okay, I'm going to go into industry. This is the last kind of attempt at it. And I took a contract with an investment firm, and it was reporting. So I was
fund accounting?
Fund accounting, yeah, exactly. Fund. Yeah. So I was like, okay, I'm going to go into some sort of reporting role. I really want to be able to just see financial statements and put them together. Yeah. And that's where I was like, okay, I like this stuff. Yeah. Like, it wasn't just putting together a financial statement. It was like, how can we do this faster? How can we do it better? It moved out of that. That's when I was like, okay, this is what I'm good at, is like, I understand accounting. That first role was like updating a financial statement package that was in Word from Excel.
Yes. But yes, we used to do that manually back then.
Yeah, just I learned how to link the two so we could we were only updating the spreadsheet.
Yes.
And again, dating myself again, but this was like 2007, 8, I think, at this, or 2009 into 10. So then I was like, okay, like I'm like on the cutting edge right now. I'm figuring things out, because they were blown away by all these things that I researched and was able to do. So
so you're the type of person that's good at those little like links and automations and stuff.
Yeah,
like that?
I love that. I love that stuff. Good. And that's like, that's why
that's a unique skill set, actually. Yeah, because I don't really have it.
Yeah. Like, did you?
I'm not really good at automations and linking and that sort of thing. Yeah. I mean, I'm good with like the numbers and the bigger picture type of stuff, but sometimes the little details I'm not as good. Yeah. But I know exactly what you're talking about, right? Like some accountants, they like the technical, the automations,
For me, it's like I see, if I see
a very tech savvy accountant.
Yeah, totally.
A very tech savvy accountant.
That's why AI is exciting for me as well. Yeah. It's like, sure. We're going to see probably in the next 5 years, like our landscape change, and big firms are already saying that, the juniors are going to be doing manager jobs, but I think that's just like they're trying to say the controversial thing. Just like Meta is saying developers won't exist. That's it. PwC wants to be the first to say this, or whatever Big Four comes out with the hot take on what AI is going to do to accounting. I think there's still a lot. We can touch on that later, I guess, right? But my passion early on became that, like, this doesn't make sense that we're doing this much work. Like, I see. We have things that can do it faster. And when I was a junior, it was like really helpful, especially in industry, to help me like get trust and, you know, just mainly trust of like my managers. They'd be like, okay, like we can give Pav this and leave it with him and he'll figure something better out.
Yeah. Which is a great reputation to develop.
Yeah, exactly. And that started getting me to move up faster. But then, you know, that was like just I think it was a 10-month contract or short contract that I took on. And then I went to real estate. That was another similar role, working for it's for Bentall Kennedy. I think they're still called Bentall Kennedy.
Oh, the developer.
Yeah. So, but they were, so that time my role was, we managed, so Bentall was more of like a property manager as well. So they'd build the buildings and then they would have investors and then have to report. So I'd be reporting on like buildings, like the US Bank building in Seattle was my building to put all the reporting together for all the investors.
Oh, I actually didn't know that they're not just in Vancouver. They own a bunch of stuff.
Well, it's like it's all owned by like a fund essentially. So similar kind of fund reporting that I was doing.
Real estate's pretty big in Vancouver. Like I know quite a few people who went into real estate after commercial real estate investment type of investment portfolios.
Yeah, and I was like, that was similar in the sense that like similar to a Big Four because it was massive. We were actually in the same office tower as Deloitte, so I was like, I went from like the 29th floor down to the 18th or whatever, and it was like, but there's so many different parts. There's internal audit on the team. There was one whole floor of just accountants, and then the next floor was property managers, and then, you know, so there's like a lot of, I could see that it's a good area to be in if you want to live in Vancouver and work in Vancouver. And a lot of my experience again was around reporting there and dealing with non-accountants and reporting to them, helping them understand the numbers and again, like inheriting a process and trying to make it better was really my way of working my way up early in my career. How about you?
After I left the firm, I went into a boutique management consulting firm. And that's where I learned, I guess, a lot of like pubco type work, which is very heavy in compliance. Like SOX, internal controls, operations, like reporting, like controls around reporting and stuff like that. But I think that was a good experience in that I got the exposure to the traditional industries of like mining and forestry, and kind of realized that, you know, that's definitely not the path that I want to go down personally. Just because it's very, I don't know, mining is a bit of an old boys club. And I don't know, some of those industries are just so a little bit more on the old school side, I guess you would say. Things like the way they do things, it's very, public companies especially, like public company reporting is very cut and dry. It just strict. It's very strict. It has to be done a certain way. And it just, that's the only way it can be done. Right? So I learned a lot about internal audit there. So I think that was a good experience as well.
Did you feel like, so when you say the old boys club, but also old school mentality, did you just feel like, were you feeling like you weren't being challenged or you weren't able to make any impact in that stage?
No, I mean, I think I did well in my own way. Like I always just found opportunities to show up. Like that was kind of how I went up in my career. Like I seized opportunities when they came to me. Because, you know, special projects, stuff like that. When I worked for the consulting firm, there was a blockchain client that was having some issues. Well, we were kind of like third-party external consultants for them, but they were having some issues with their audit, and I went in and kind of like took charge of that. Took charge of that project and that process, and just like little things like that, like seizing opportunity.
Would it get assigned to you, or was it like?
Assigned. Kind of like raising your hand when special opportunities come up and stuff like that. But I knew that kind of the traditional. I know like mining is kind of like the name of the game in Vancouver, but I just knew that going down a path like that wasn't really for me. Or even just like pubco stuff in general. But I think to each his own. Like there are a lot of people that go work for public companies and they don't mind it. Like there are pros and cons of working for a company that's more structured versus like a startup, you know, or like a tech company where things are a little bit maybe their processes aren't fully in place or they're still trying to figure things out. So I think there's pros and cons in that way. But I personally I didn't really like the over-structured environments too much.
How long were you with that, in that space?
The consulting company.
Yeah.
I think it was a year, 2 years.
Okay.
Yeah, 2 years.
Yeah.
But then it was around that point that, because I was always in kind of like client-facing roles up to that point, it was at that point I was like, oh, I'm going to go into industry because I need that industry experience to make this complete. You know, I was like, I'm missing that because when you're only in public practice, you're only in a client-facing role. There is a, you know, you're not really in the operations of the company, right? You're always kind of like thinking on the outside.
Yeah.
So that's when I decided to go into industry, and I started with a tech company.
You know what's interesting when we talk and we're just like, I decided and then I went here.
Yeah.
Like, how long is that actual period of you realizing it's not for you, and how long it takes you to make that transition?
Yeah, I mean, like when you're changing jobs, it's I don't know, like sometimes you work at a place for a little bit and then you kind of know like, oh, I probably don't want to be here long term.
Yeah. So you're there at this management consulting place for 2 years.
Yeah, it was a good.
You know?
Oh, when did I know? Just towards the end. It was just starting to get still. Yeah.
Okay. So you made a quick decision, like
quick
it's
decision.
not for me.
I'm a little impulsive. With my decision making. I make quick. When I decide something's done, I'm like, I'm done with this.
Yeah.
But no, it was a good experience. Like I had a good relationship with the people there. And honestly, I can say like throughout my entire career, I've always had a good relationship with people that I've worked with, right?
Yeah, that's key.
No, it's very important. It's very, very important. But I kind of just knew that role wasn't really for me. Decided to go into tech because tech is cool.
Yeah.
Right. I've always been more like, oh, this is more hip, right? This is much more hip, much more cool. Like get to work from home.
Place to be, like, mining, same kind of thing at the time.
Tech is cool. Tech is hip. So I went and worked for a SaaS company. And then I was like,
for a SaaS company.
I worked for a SaaS company. Yeah. And then I was like, no inventory. So good. So good. I was like, that's not bad at all. Like,
totally.
No inventory. That's how they sold me. They're like, no inventory. I was like, nice.
Yes, dude. Yeah. What year was this?
I think it was 2022 or 2023 that I went into industry.
Okay.
Yeah.
Okay.
I don't remember the dates right. I'm dating myself a little bit.
Yeah. No, I'm just curious because it's like what was the state of tech at that time? Like, was it a well-funded company?
That company had already sold to private equity once, and then already sold to public company. So by the time I got there, it was already like public company reporting.
Oh,
yeah.
Okay.
Yeah.
Gotcha.
So it was a tech company, but it was
so probably revenue recognition was the biggest.
Rev rec.
Yeah.
3-day closes.
Yeah.
Yeah, that was brutal.
Yeah.
We reported into a subsidiary that reported into the parent co.
Okay.
So it was very like
you had to close quickly.
A lot of accruals and reversals. Like the whole GL was accruals and reversals.
Right, because you're trying to close so quick.
And I remember like just scrolling through the GL. I'm like, dude, I can't even read this because it's all just like, you know what I mean? It's so messy. It's all just accruals and reversals. Yeah. And you're trying to like trace stuff back and you're like, dude, I can't like, it's like, it's hard to understand.
It's the one actual invoice for the month. That was.
Yeah. And this was like when I just first got into industry too. So the whole concept of like, like accruals and reversals on a monthly basis, I didn't really click. It took a couple months for me to like click and understand. Like, I guess they say it like takes about a quarter to like really understand the whole process and and then once you get that down to a T, closing is really easy. And then it just becomes like a repeatable process. But no, there was some interesting experience there. Like they were doing an ERP implementation, so I got to be a part of that.
Cool.
You get really unique experiences when you work at different companies of like different industries, and that kind of shapes the perspective. I
think that actually working at a company in different industries and inside the organization was really helpful because you're looking at, you're not just learning about that industry, you're learning about how to lead that industry as well. Like the CEO, what the CEO does, what's successful, how to run in even operating systems within a company. If they're using something like EOS or one of these, coaching programs. That's stuff you don't see in public practice either.
No, I remember the very first time someone told me about EOS. So that was interesting for me. Because it's stuff you don't learn about in public practice.
You don't.
I heard they recently got acquired by a private equity a couple of years ago.
EOS?
Yeah.
Oh no.
And then I think it was
I could see that. Like.
And then the private equity firm came in and they tried to trademark a whole bunch of stuff so that people couldn't copy or like rip off EOS and just sell like the system.
Because there's so much of that.
Yeah,
because it's just now they're all like just. It's like I guess it's like religion, right? Everything kind of peeled off of from one single religion.
Have you done any EOS training or kind of?
Yeah.
Okay.
When my first executive role that I took for a customs brokerage, and it was located in South Surrey, and that was the first time I was exposed to EOS. Even from like working in a company. Like I didn't see our executives working in EOS. I knew they were working with coaches, but never really saw that. But when I started working on an exec team as like the head of finance, that's when
you don't get that exposure of what management is doing until you're in management.
Yeah.
You're kind of like, you hear bits and pieces and tidbits, and then you don't really fully know what's going on.
And you're always like, how do they know like we should be doing this right?
Yeah, how do they know we should do this? And then a couple of years later, you think back and you're like, oh, that's what they were doing. Like you piece together the puzzle, like, oh, that was their strategy. That's what they were doing.
For me, I've been like, the company that I work for, when we're on the exec team, we're very transparent. We're told everybody like this. We're working like our executives. We have a coach.
I appreciate when I work for a company that's transparent. And actually tells you what's going on, so it doesn't feel like you're just kind of in the weeds. Yeah,
because I think a lot of leaders, especially if you're looking at like the older generation than us, I think there's this bit of complex that they need to have this power over the business, and like, like I'm the one who knows everything. And like we can't say that we're working with a coach who's not in the company. Right. So I think now that that has changed a lot with our, like, I mean, it's more out there what's happening, but I thought that was a really cool thing to do, is like you're working on this EOS, this company's producing a plan, 5-year plan, 1-year plan, our objectives for the quarter. We're working with a coach, and being able to like communicate that to the company. We even had at the time, like we got everyone to read the same book the executive team was reading, and it was called "What the Heck is EOS," which was the fundamentals of EOS. But it's like, everyone in the company is going to read this, so you guys kind of know what we're doing. And that's the beauty of EOS as well, is like they encourage that. And so that was a cool experience, is to like not only put together strategy, execute it, but then also communicate it, and how the communication is going to help you execute it. And, so that was a great learning.
No, for sure. I definitely think like my first job in industry, you realize how different it is from public practice. You're not just like all kind of doing the same thing, and it's not an extension of university anymore. This is actually how a company works. We have to liaise with different departments. We have to talk to sales. I have to talk to like operations. Like, it's different. And some different personalities too. Like I'm sure you have to talk to non-accountants when you're used to just like being around and talking to accountants that understand you.
How was that for you? Was it like refreshing for you, or was it kind of like, okay, it's
a little different. Adjustment. A little different. Yeah. I think when you come from a firm, you're kind of there's a standard that needs to be. It's training, right? It's like kind of a standard that needs to be held to. But it's a little different when you're going into industry, like just like talking to people. Adjusting your language based on who you're talking to, just stuff like that.
And it's not only just, I find it's not only, the adjustment isn't only just now you're dealing with other departments. The accountants you're dealing with are different. Right? Like you're working with all these driven individuals in public practice that want to get their designation, and they're like all talking, well, I'm going to write this time, I have this class, to like, oh, you're working with like a 55-year-old mother of 3 who just doesn't really care about a designation, and
but she's good at her job.
And just loves doing
this
work. So that was a big adjustment for me. Because if we go back to like all my junior roles, and then all of a sudden I become manager, and I'm leading this team of like 7 accountants where nobody has a CPA. I did that. No one really wanted a CPA, but there was like a finance manager, and these people had these titles that I always thought you need a designation to get. And I definitely was like, well, I'm hot shit. So, and plus, like, I can do anything with a spreadsheet. So,
look at me, like,
I would just like, I'm going to teach you guys everything, and I would like go and sit down with each person, and that's what they hired me for. Because the CFO was very like, hey, like she was a CPA, but she was like, I know there's so much that needs to be done, but I'm the CFO. I can't be like sitting next to these people next to their desk watching what they do and I'd proven I'd done that. But so I came, a big chip on my shoulder of like, I'm going to sit down next to you, and then I'm going to be like, ooh, why are you doing that? Okay. Do you know you could use an if statement for that? And they're just like,
who's this guy?
Who's this guy? And like, this was I was 26 years old, and it's the first time I started, like, I got really stressed because, like, I'm like, why are these people just not doing what I say? And why isn't everyone driven to, like, make all these improvements?
Yeah.
Right.
Yeah.
And it was a wake up call for me, but I also got really stressed. Like, it was a different type of stress.
Yeah. No, I understand that.
I was starting to manage people.
Yeah.
And trying to get them to do things.
Yeah.
That was a lot easier when you're working. Even I would even say when you're working in, like, public practice to a public company, like, people in the accounting department in a public company is still very much like a public practice. Pretty much,
because they have to be trained to that standard.
Yeah, and they're all kind of there for the same reason. Like, I want to learn how to do all this work. I want to learn how to report, and they're driven in that sense.
Yeah.
But yeah, that was the biggest adjustment. I think it also was the adjustment of becoming a manager from not being a manager.
Yeah.
And just
managing a team of 6 people is not easy. I did that for a period too.
Yeah.
Like, because I was always
that the
taught,
SaaS job?
Yeah.
Okay.
Well, I was taught that, like, a good manager doesn't do the work. The good manager, like, delegates the work and, like, just manages the people.
Yeah.
Right. Which doesn't really always happen in reality. Not doing the work is an adjustment.
Yeah.
Because, I can do it, like, better than everyone else. Like, look at me go, right?
Yeah.
Why aren't you guys doing it the way that I want to do it? But that's not what makes a good manager. A manager is someone who, like, empowers, right? And, like, teaches people how to do it properly. Because then otherwise you just end up doing the job of 6 people, which isn't the point.
Yeah.
Right. And one person leaves, and then it's like, now what? Now you got to do 2 jobs, 3 jobs. Like, that's not really sustainable. So,
yeah, I think it's also that psychological adjustment of your value has been, up until you became manager, your value has been getting the work done and having this result, even all through public practice and university. You're like doing this thing, getting it done.
Yeah. Yeah.
To, like, okay, now I got to find people to do it.
Yeah.
And I have to coach them and deal with different personalities.
Yeah.
Again, something you don't really learn in school.
No, definitely not. It's good experience though. And I think, like, as you become a business owner, even more, right? Like,
yeah. I know a lot of your audience is based in the US, and I remember there's a lot of people in the US when they're doing the CPA, there's a lot of, like, they're all trying to decide whether you go do a CPA or do an MBA. What do you see as a difference in the two?
I think there's quite a difference actually between the CPA program in Canada and in the US. Like, I know, like, as Canadians, if we get our CPA, we can go work for any, what's the phrase, like, Commonwealth country. Like, we can go to the UK and get a job pretty easily. But if I were to go, or we were to go to the US, it might be a little bit more challenging, or at least I don't really fully understand the system there, because there is, like, US GAAP, which is a little bit different than Canadian GAAP. But I think in the US, the MBA is a little bit more popular, or maybe more valued than getting a CPA. At least that's my impression. I'm not fully sure. Like, a lot of people on YouTube, like, they watch my YouTube channel, they're American, they think I have an MBA because I show the 2 designations in the background, or, like, the 2 certificates, but I don't have my MBA.
Oh, okay.
And I think in Canada, maybe this is just my experience, but, like, MBAs aren't as common. At least I don't really know. Like, no one really told me to get an MBA. I guess you could just say that, in my experience.
Yeah, I think I was kind of, like, thinking of either CPA, MBA when I was kind of having my, do I want to be an accountant? And people I talked to would always be like, the MBA is not worth it in Canada. Because
it's the work experience that matters, right? Like, at least from a hiring perspective, like, if I were hiring a hiring manager at a company, they really just, if you look in job postings and stuff like that, they really just want people with the experience that comes with the education, which I'm not sure if it's the same thing in the States. But I know that in the States, the prestigious path is usually, like, investment banking or management consulting, right? But I guess there are more opportunities down in the States in that way.
Yeah. I think, like, in Canada, you have to be a little more intentional with why you're doing the MBA. Like, it's very, like, okay, I've been working this role and I want to be, they've told me that maybe your employer has said, we want you to do an MBA because we want to promote you to a CEO or an executive role. Right. So, like, go do this. Or it's like you're in, I think it's common in Canada with the big banks. With big banks, okay. Right? Yeah, like, if you work for CIBC value, or TD CIBC. Or like, I know people that they went, did an MBA just so that they can get onto this, go work in Toronto at CIBC, for example. Right. Because you can, right. That MBA would really help you in that.
I know the CFA is good though. Yeah. Like, the CFA is definitely
really CFA is good. But I think the MBA, like, if you want to be outside of the investment banking part of it, like, there's a lot of other stuff with the banks. And I think a lot of these big head offices in Toronto, like they do value the MBA probably more than what we see in Vancouver.
Yeah, Vancouver is very mid-market. Pretty much everyone that I know like that got into like banking had to leave Vancouver.
Yeah.
And there's no like BCG or like McKinsey in Vancouver.
Yeah,
like that doesn't really exist.
Yeah.
There's some small public companies in Vancouver. It is a pretty small, in the grand scheme of things, it is small, right? I mean, at the end of the day, like 70% of businesses are SMBs in North America.
Yeah.
Right. So that's it's a small experience.
Yeah, I think that's the other thing is like a lot of people compare Toronto to an American city in terms of the commerce and the way people, or the way they move and the way they work is similar to the US.
Yeah.
And I think that probably why you see the designation, or not designation, the MBA more valued in Toronto, because there's you have these head offices, like it's we just lack that in Vancouver.
In Vancouver, it's so much more about your experience.
Yeah.
Because, I mean, for example, like Kevin, like we have our different experience, but Kevin, after he left Deloitte, he went into reporting for a few years. And then he had, I guess, a good opportunity in an industry where the EBITDA multiples were really high at the time. And he was able to take a company public. And then after that, he did fractional CFO work for a few years, kind of like help raise money and stuff like that. And that's kind of where he learned the finance stuff, which is a bit of a harder experience to get in Vancouver. You kind of just go down a traditional path.
I think, we were talking for this. Like, there's not a lot of people that
there aren't. It's very niche.
In Vancouver. But I think when you get into bigger markets, there's probably a little more of that.
Yeah. But I guess it's good for him, though, because he was kind of able to kind of take that experience and learn some pretty specific things about finance he taught me in afterwards.
Yeah, and it's interesting the way Kevin's done it, because a lot of, I think, like with the experience he has is kind of like that experience that I kind of say you got to go away to get, and then you can come back to Vancouver. Like you got to go work in Toronto, New York, or somewhere big, and then come back to Vancouver if that's really where you want to live. Yeah. But he's kind of done it the best of both worlds, gets to do it in Vancouver and still live in a city that most people love.
For the most part.
Yeah.
So in 2021, you decided to take the leap of faith and start your own accounting firm. What prompted you to that decision, as opposed to kind of working your way, kind of continuing an ELT role or an executive role in industry? Yeah,
I was working from 2019. I started with Boast as their head of finance, and that role I was they do shred claims, and I was actually initially hired to replace a CFO, and they had a back office accounting team which basically did like bookkeeping for their shred clients who needed bookkeepers. So there was a little practice that had started, and I was heading that, plus I was doing Boast financials, and so I'd be working with a lot of different startups. I had a small team that I was getting it delivered with. When I say small team, one person. And we, I was loving it. Like I would, every day would be different. And I'm doing like bookkeeping, basically essentially controllership stuff for these clients. I'm like, I know how to, like, I love this stuff. Like I can do it in my sleep. So multiple clients, and we're working on that. And then Boast decided we were going to do a raise, and when you're trying to raise from an investor, they want to make sure you're focused on one thing. And it made sense to focus on shred, because shred was growing at that time.
Okay. So they want like a productized service.
Yeah, exactly. And they had automated the shred side, and when I joined, the goal was to possibly automate the back office, but that was kind of something they do way down the road. Like we'll figure out the accounting and bookkeeping, but right now shred we have figured out. So, but to make it more appealing to investors, it was like, okay, we'll wind down the back office stuff. So I gave all the clients away to other firms and focused on just the finances for Boast. And we did the raise. We did a Series A raise with an investor in New York. And so going through that whole due diligence, that was like, I think about 6-month process. I wasn't heavily involved in there was no real process of let's go find an investor. It just like there was a good connection with the founders and the investor. And I was like, okay, I was mainly like due diligence stuff. And then after the due diligence, how do we set up all the reporting? And so shortly after we had raised, that was the $30 million raise that we did. And shortly after that, you know, the reporting changes, we got to figure all that out. And I decided, okay, like, and they had hired a CFO. That was heartbreaking, to be honest. And but I think, you know, not getting too much into it made sense that would happen. You know, you raise from an investor in the US that you know, they want to make sure that the investment's protected. And
so they wanted a very specific profile.
Yeah. And it was a US based CFO.
Yeah.
So
these things happen too. It's happened at other companies that I work with where they bring in a very specific person because they just want that specific person to do that specific thing. Yeah.
Totally. But you know, it was I gave it a go and I went, okay, like when did I really enjoy this job? It was when I was doing the back office stuff and I was working with all these different startups, and I had this excitement waking up every morning of who am I going to help today and how am I going to help them? And so when I started my firm, I was, I still hadn't been convinced. Like I left Boast and, or not left, but I decided I was going to leave, started applying for jobs. I had 3 job offers. 2 of them were way too low, but all startups. And one was like exactly where it was a Series B company. So they'd done 2 raises. And I was like, okay, I'm going to go work for them. And when I started, like, it wasn't the right fit. I resigned, I think 5 weeks in. And then I went back to the other 2 that I'd gotten the job offers from, and I went, hey, like, you can hire me part-time. Like, I'm going to start this firm. And they were like, yeah, sure, that makes sense. So had 2 contracts right away. And then I actually went back to my, to Boast and told them, hey, it didn't work out. And they're like, oh, we actually could use you as well. So I had 3 clients. Boast was one of them, and which was nice. And
on a fractional basis, I guess. Fractional basis,
yeah. So I had kind of three jobs doing them all myself. And that's really how it started. And it was like, this is exactly what I loved, is helping multiple clients at a time.
So you worked a lot with startups, like anywhere from 1 million in revenue to 10 million in revenue. What are some things that I guess startups struggle with, or like what are some areas that you would be able, like, you come in, or a fractional CFO would come in, or what are some questions that if a startup were to look for a fractional CFO, like what should they be asking?
I think on the fractional level, the bookkeeping and controller services that we offer are really the big value for them, for the clients, because you know, they're used to just looking at their finances once a year, catching it up, doing the taxes, and they don't really look at that side of things. So for startups, especially in the 1 million to 10 million range, like having a good bookkeeper and a controller is key. And so what we offer with that is like, we'll have your bookkeeping done, like we'll close the month off in 3 to 5 days, and then after that is the controller piece where we analyze, we give you feedback on what's happening with your financials, you know, budget versus actual, or month over month. And that's where you can start making decisions. And cash flow management is the other piece.
Cash flow management is very important.
Like, let's look at it every week. The CFO services, I think, you know, those come in. There's what I find is a lot of early stage companies that are under $1 million want the CFO to help them raise. And that's really, that's where our service comes in, is like, okay, when you're before, you don't really need a CFO.
No, and most companies don't. Right? Like most companies don't need a CFO.
They don't. Up until 10 million, you probably don't need a CFO unless you have investment.
And it's expensive, right?
If you have an investment and the investor wants it, it's like a whole thing there. But for me, what my CFO services are, what it is with a lot of these startups is helping them figure out their story to investors, like from a financial perspective. Like, how are you going to put this in front of an investor, and how are you going to show them what the value can become, and what the real play here is. And this is how we'll spend the money that you give us. And that's kind of what I mainly deal with. But outside of that, like, if if I'm dealing with a company that has an investor already and they're between 1 to 10 million, at that point, you're just making sure you're getting the reporting right.
Yep.
And that's all kind of falls under the controller.
Yes.
At the end of the
for
day,
the most part,
right? Like just how do we get the numbers to them? And then the forecasting FP&A piece is obviously like where it does fall into more of the CFO's desk. And so we offer that as well, like FP&A, budgeting and forecasting as companies are growing.
There are a lot of job titles and terms and stuff that are around, like controller, like fractional CFO, CFO. Like what would, just for someone who maybe doesn't know or it's the first time they're hearing about, what would you say is the difference between the three? Because there is a difference.
Controller versus CFO is like the easiest way to look at it is a controller is really looking at like historical stuff. And CFO is more the forward-looking. And the forward-looking, a lot of that, like a controller, kind of it falls under the controller, like cash flow management.
A strong controller could do a little bit of that work too for a little bit of that,
especially for up until 10 million. You can get a lot out of a really good controller, and there's a lot of them, a lot of good controllers out there. So I always advise companies to start with that role first. If they're going to hire in-house. So we also do that, is help companies figure out what they're going to hire for. And it always 9 times out of 10 is like hire a controller. That person will handle a lot of this.
When would a company need a true CFO?
I think it is when you get to that second raise. That's a space that takes a certain type of CFO as well. And I think when you're a public company, obviously as well, but that's when you're getting much larger. But I think at the stage of when you're like, let's hire a CFO, it really depends on what your business is going to be doing. Like, a SaaS company is just going to keep raising. So there's that. But like, if there's special projects that you want to have someone be a part of, or if you need to go to a bank and really negotiate different types of funding, where it gets a little more complex, a really strong CFO can help in that, and the relationships they have.
Yes, that's a big part of it as well. Because once you get to the CFO level, it really depends on the CFO themselves.
The reputation.
Their reputation, their experience, like their depth of knowledge in the industry that they have. So then it becomes more of like a individual person that they're looking for. You know what I mean?
Like, have you worked for like a CFO in that space before?
Yes. Yes. Like the industry CFOs that kind of like just kind of made their way up industry, and then kind of bigger CFOs that have, I guess they're like the audit, the audit financial reporting CFOs.
Right.
So it's different. It really depends.
That's a good difference here. Like there's industry CFO.
Yes. There's industry CFO, the kind of the mining CFO type that's really good at financial reporting, can handle the audit committee, like can deal with the audit. Do the public company raises and stuff like that.
Totally.
And then there's like
investor relations and
stuff like that. And then there's like, for example, like a SaaS CFO who's just like worked for a long time and really understands SaaS really, really well, and is able to bring, just like insight on how to scale. Right. And should a SaaS company grow with debt or equity, you know what I mean? Just like stuff like that.
More of like the investor in like the investment banking CFO. I think that's a really good, a good way to break it up is the 3 different types of CFOs. Right? Because even that, like when we're going through school, like, and for your audience, that's the students, like these are the different types of CFOs you can be as well.
So many different types, like accounting and finance is such a big field.
Because there is a lot of CFOs that just became CFO from like working
at a company for a really long time.
Yeah, exactly.
Like 20 years.
Exactly. And it's just like they know the business, or they've been brought in from a different business in the same industry. And that was larger, and now they're hired for a smaller company as a CFO. And it's like, but that's just someone, that's the industry expertise in that industry to grow that business.
Yes.
Yeah. That's a good way to put it.
Yeah. A lot of different types.
And I think that's where you, like, your audience can also, the people that are kind of going, okay, well, I don't think that was in my head when I left public practice. It was just like audit CFO.
Yeah, audit CFO. Yeah. That's kind of like the goal or the dream that a lot of people get taught, or like that's the outcome. Like in an ideal world, we all would have been like mining CFOs, right? But obviously, like I wouldn't want to do that. No desire to do traditional like financial reporting, audit type work,
Yeah.
even though I could. I mean, it's good experience in that like it's given me business acumen. For me, I guess like for me, the way I see it is like, oh, it's given me all this business acumen. Now I can go take it and do other things, like start my own business, like go on these other side quests and ventures and stuff like that, and eventually become
I want to know more about that, because you were on this route of being an accountant, and what was your last role before you kind of went into the creative space?
The SaaS company that I work for. Yeah. I kind of started dabbling in YouTube back in like 2022, 2023, that time there. It was after I'd started all these like side quests. I was like, what was it back then? It was Amazon FBA. So I'd like watch these YouTube videos and people are like, oh, you can just like buy inventory on Alibaba and list it on Amazon and then you're going to be rich, right? And I was like, I'm going to do that. So I started just kind of in the evenings researching with suppliers and like negotiating with them. And then like I bought random crap really just in hindsight that I didn't even know what I was doing back then because I was just so new, just kind of like following instructions of what everyone else is doing. So I started doing that, would list these products, would run the ads, really didn't know what I was doing, didn't really end up being a success in any way there. I mean, I recuperated like most of the money back. Some or most of the back, but I guess it didn't really work in hindsight.
A fun experiment though.
Yeah, fun experiment. I don't really like doing inventory stuff that much, to be honest. It's quite stressful. Like managing like orders, inventory. It's not like you don't have to hire people, right? Like when you run a service-based business, it's very people. Right, you have to hire people, you have to manage people, which has its own set of challenges and difficulties. But I'm not a big fan of anything inventory based. Merch, you know what I mean, like that sort of stuff, because it's just like shipping. But even just like dealing with the accounting afterwards, I was like, oh, I hate. Like, I remember like filing my taxes and be like, oh, why did I go into this like business? Like it's taking me like 2 weeks to like figure out like just like simple inventory reconciliations and stuff. And I guess because of my accounting background, I'm like, no, everything needs to be done properly, right? But I just like, wasn't really a fan of inventory stuff. Decided to kind of shut that down. And I read this book called The Millionaire Fast Lane. And in that book, he kind of talks about the different paths to wealth and stuff like that. And he mentions YouTube, right? Just like in one of the pages, there was just like mention of YouTube being a path to, making a lot of money. Right. And so I decided to start my channel. And back then it was just me and Kevin. And, back then I was still working full time. I didn't really, I don't know, I guess there's a little bit of a conflict of interest when you're still working for somebody and then coming out and talk about what I talk now, which is like money. Right. I guess I wasn't really comfortable talking about money and business stuff back then. I was like, I didn't really want people to know, you know what I mean? Like, don't want, like, if this takes off, I don't really want anyone to know. So I kind of want to do it in something that's not like more of a hobby, passion, and not that big of a deal. So I started in cooking because I like food and I like to cook. And back then, Kevin and I, we went on a bit of a phase. So like Kevin, like we're the type of people that are really into trends. Like all trends, like anything that you see online, like, the latest mechanical keyboard, like all the stuff. And this was around the COVID years, right? When kind of people were locked in at home. There was something called the keto diet that was really, really popular back then. And Kevin started doing all this research about it and telling me about it because, for health reasons, like he has a bit of a skin condition that he's been battling for most of his life. And when you're like a teenager, you have acne. I had acne when I was a teenager, and it kind of makes you a little bit self-conscious. So he kind of has that, and I guess he's doing his own research on the side. And he comes across this person called Dr. Eric Berg on YouTube, very big doctor. He starts talking about the keto diet. He's American, right? And I guess down in America, there is a obesity/diabetes pandemic. And so he's a big proponent of like natural health remedies, alternative health remedies. Starts talking about the keto diet. Kevin starts going down a phase of like wanting to do it. And so, we're both Asian. So I was like, I can't cut out rice. I was like, that's that's weird. I can't cut out rice. And he's like, no, we're going to do it. We're going to try it. He's like, just try it. I promise. It's going to be good. He starts doing it first. I'm like, dude, you're really weird. Like I can't not eat rice for dinner. But he kind of slowly, because him and I do everything together, so slowly I kind of just follow what he does. And it was around the time when we were like we were engaged. We were about to get married. And we had this motivation. We're gonna like work, dude. Like you're getting married, you gotta look good, gotta look snatched for my wedding. So we were like, we went on a bit of a health phase binge there. And that's when we kind of started to do all this like research, and we started really getting into it.
Yeah.
He lost a bunch of weight. I had lost a little bit of weight too, but it just like we looked good. We're healthy. But I guess for his skin condition, it still wasn't like really like we saw like the physical benefits, but it still wasn't really improving. And so he goes on like further research, and he's like, I found more doctors, and they're saying these things. And he comes across somebody called Dr. Paul Salandino.
Okay.
Who's he's the pioneer of this thing called the carnivore diet, and he's pretty big on YouTube as well. He's a really smart guy, a little bit quirky, just like he's a little bit extreme in his like health beliefs, but he's a really smart guy, and he's really big on like animal-based diets and like you eat meat and fruit, and like that's kind of the natural way of going about it, and that's his whole message. So Kevin's like, oh, we're gonna try this, and I was like, well, that sounds crazy, because like who even does that in real life, right? But then we kind of go down, but then again, like I kind of just followed suit, and we kind of tried this thing. Then we started making YouTube videos about it.
Oh, so during the keto, you didn't make any videos?
We made a little we made a little bit. No. Yeah, I guess no, we didn't. It was kind of around the same time.
Yeah, it was so meant to like, what was the purpose of making the carnivore? Like you got just showing people what you're eating? Pretty
much. It was kind of like fun for us in a way, like, hey, look at this thing, look what we're doing. So we started like posting, I guess, a little bit cringy videos, like this is what I eat in a day, like these are these recipes, like this is how you can do it. But then there was like so much interest, right? There was all these people that like were watching, and then they were loving it, and then they were sharing their stories. And there are a lot of people with like chronic health conditions in the US that have like autoimmune conditions, like gut health and stuff like that benefit from that way of eating. Neither him and I do it anymore, but I guess it was a phase for us that so we made all these videos about it. Got some interesting backlash from certain people, but it's just the way it is.
But it was like more of like a passion for sharing your knowledge and whatever you're learning and what you're experiencing.
Pretty much, because I didn't really have a strategy back then of what I was doing with social media. It was kind of just like, let's just make these videos and see how it goes. I started doing a little bit of coaching, and that's when I realized that, hey, there's a monetization path to having a YouTube channel. And with YouTube, there are many different monetization paths you can take down, but coaching is one of them. And we started this coaching program. We started like helping other people, kind of just like, when you're like, we were talking about accounting a lot, right?
Yeah.
Like when you become a senior accountant, you teach the junior accountants what to do. Right. That's basically like how we approached coaching. So it's like, hey, we did this thing. We have a little bit of experience. Now we're going to like teach you and then be able to like monetize an interest and passion of ours. That's kind of what took us down the carnivore route. But then obviously that's not really me. And like, that's not what I'm going to do long term. I don't mind like doing it, sharing it for fun, but like, this is around the time that I decided that I was going to be more serious about YouTube, about what I was going to do. And it was at this time that, I don't know, I guess the timeline is starting to get a little mixed, but I gave birth in late December 2022. And it was at that time I was like, no, I'm not going back to work after this. Yeah. Right? I was like, no, I'm going to cut the cord. I'm not going to go back. We're going to go all in on YouTube and just like find a way to make it work.
Yeah.
Right. And so that's when I launched the coaching program and found a way to make it work. Yeah. And then lo and behold, I actually ended up kind of in the midst of this like entrepreneurial thing where I was like, I don't really even know what I'm doing. I'm kind of having these breakdowns. Like, this is really stressful. I think I'm kind of spiraling down into a bit of a low moment of my life. I ended up taking a short-term contract job with another SaaS company. Okay. It didn't last very long.
Went back into accounting.
Yeah, went back into accounting. Oh. But then I was like, that's not for me either. Yeah. So then I ended up quitting on a very short time frame, which I don't think they were super happy.
It's not on the resume.
No. And then decided to kind of go all in. And that's when I rebranded and kind of pivoted the channel. And that's when, because I was like fully detached from corporate at that point, that's when I was like, okay, I'll start making videos about money, talking about money, talking a little bit of my experience of like how I made money online.
But when you're
getting into personal finance.
When you're making that decision of going into the creative space, is there a bit of mourning of your old career that you felt?
Yeah. No, for sure. I think that it took me a while to kind of grow into the new version of myself. And I think for a period there, I went into like a bit of a tough part of my life, right? Like, like some people call it like rock bottom. Maybe that's what I would call it. Like I hit rock bottom. Right? Not in like a substance abuse sort of like sense. It just mean like, it was just, I didn't really know what I was doing. I was kind of not grounded yet.
Well, you're rock bottom being such a high performer your whole life, right?
Yeah.
You're kind of like, you were so
I guess
like,
so. I've always like, I've always been someone that's always very focused. I always had a plan. So when me, like, I don't have a plan, I don't have certainty, I don't have like an outcome, to me, that's really stressful. It's actually like physiologically stressful on my body and like my mental state, right? So for me, I kind of like broke down and I kind of hermited away from some of my friends and some of my family at the time. I kind of just like focused and did my own thing, right? And kind of rebuilt this.
Yeah, because I guess what I'm fascinated with is because, you know, there's obviously you picked this route, which you and I both picked.
Yes.
Because of family pressure and, you know, you want to pick a career that makes money. And so was that a part of like in the back of your head, like my parents, like, is that still something that
they gave me a very hard time with leaving, which I think is understandable. Like I try to understand it from their perspective. They're like, why would you leave? You work so hard to do this thing. There's this like end goal for
like,
you.
Keep in mind, you're married, you have kids, and like that's the
financial?
No, but I mean like that's our culture as well. It's like we're still like attached to our parents in some sense of in that way. Yeah. Yeah. It's not, it doesn't end once you get married or have your own kids. No. Yeah. That's interesting. Did you have doubt from that, or did you want to go in that direction?
No, because I'm very stubborn.
Yeah.
Like I was like, no, like I do what I do. And I think that's what I've had to learn along the way of going out on my own. Right. And I say this hopefully to like inspire people who want to go out on their own. Sometimes you just got to stick to your own path and stick to your own guts until you, I don't want to use the word make it, but until you found a path forward, right? And so for me, I knew the old path, it's just like the room that I walked into wasn't the room I was going to stay in forever. But I stayed really persistent and I just kept, you know, plugging away and I just kept like working at what I wanted to work at. I have that stubbornness to me where I'm like, no, when I say I want to do something, like it's going to be this way. But I guess it's a good and a bad thing, and that like I can be stubborn and like not listen to people's opinions, but at the same time, like it's good for me in that like I'm able to kind of make these decisions, these career decisions where I'm like, no, I'm going this direction. Nope, I'm going this direction. Like I just have that. I just have that in me.
Yeah. I mean, people have patterns in their life, and you're mentioning stubbornness, but I think even through your whole career, you've always, I think, enjoyed the most is when you're helping people. Yeah. Right? Like, whether it was the clients, private equity clients you had early on in your career, and now sharing your journey through keto and the carnivore diet, it's all instilled in that same pattern of your life, which is really fascinating as well.
You know, when you're younger, I guess there's this, like, we talked about this, like, there's just this vision of like what you're going to do and it's going to be all set in stone for you. But then you end up going on your own path. Like so many different accountants out there, so many different types of CFOs out there, like, but you went on your own path. You decided to start your firm. I decided to go on YouTube, which like who would have imagined, like going down the creative space, like who would have even imagined? But the creative space is just like one thing, one part of what I do. I don't, like, I still have longer term plans of, you know, maybe wanting to be an investor, right? Like wanting to, I think that's like the bigger long-term goal. But I think for something like that, it would be like, I'd require quite a bit of experience to like pull it off and bring it all together. And I had to bring a lot of people together to make that work. Right. Cause that's challenging in its own way.
Yeah. I think any career move you're making or any change, they've got to have some sort of guiding principle that's guiding you through that. Like, even when you become an investor, it's going to be like, what type of investor do I want to be?
And there's no roadmap to becoming an investor either.
Yeah, exactly.
Like who like there's no,
you need that guiding principle of what you stand for and what you're going to go for. If you become a YouTuber, are you going to be, you know, the one who's like ripping around in Ferraris and showing, right? Like there's even that has such a different, there's so much diversity in what type of YouTuber you can be as well. Yeah,
there's so many different niches, so many different monetization paths. Like YouTube is huge. Like sometimes people start multiple channels of different niches and they're able to monetize all of them. So
But I think you've always rooted in just trying to help people.
Yeah, I think so. Yeah. Sharing my experience, trying to help people with my little like slightly bossy demeanor.
Personal finances, which is like you kind of almost find this like,
personal finance is a big subject, right? Because people don't, I guess, we're not taught about it in school. Right.
And you said a lot of your followers are US. Like what kind, with the personal finance side of things, are they students? Are they?
Like the demographic, it's people around my age. Okay. I think it's because people like attracts like, and so it ends up being people around my age. A mixture of like, I don't know, male and female. It depends on the topic. If I talk about like leasing cars, then it's like tends to be more like dudes. But if I talk about like a payday routine, it'll be more like women. So it depends on the topic. I talk a little bit about investing too, because I think that people that's something that people like and appreciate. I know some of that stuff from like back when I worked in the private equity space for a while. Cool. So yeah, I just try to share like different perspectives on personal finance. It's like my background, I guess, is more in business, and I'm, but you know, business is a small audience, right? But personal finance impacts everyone. Yeah.
You find like they're engaging with the personal finance, and in what way? Is it sharing stories with you mainly, or
comments, stories, likes? Like a lot of people don't. It's one of those things that we're not really taught about in school, and people are like, I think we're now in a time where people just like to look up things online and like to just research and like not just they understand why we do things the way we do things. That people are much more like knowledgeable and educated in that way, especially now with like AI too, and what AI can do. So speaking of investors, you've successfully raised $100 million for the companies that you've worked with in your career. I know a lot of times founders and entrepreneurs, they have this dream of wanting to, you know, get funding from VCs. I don't know if it's like the Shark Tank, you know, all the stuff they see on TV where it's like a dream or like success to be able to raise money for your idea. But obviously not every company that wants to raise money can raise money, and there are pros and, like with anything in life, there are pros and cons.
I think a lot of with founders in the tech startup scene, it's almost like a validation of raising is like someone's validating my idea. What I'm doing is it's going to work. But so I think that's really what in 2018, 2019, 2020, a lot of the big money that was being raised was being perceived as that, like, oh, you have a great idea, like these in Sequoia or whoever believes in it. That's amazing. And so I think that kind of got the mindset of a lot of founders that come to me and want to raise. It's like, okay, well, we have to validate it so then we can start selling. Right. And then people will buy because we've raised money and now we can make the product, and that's kind of the avenue that they see. It's like, we raised, we build the product, and then we'll be able to sell it. Where you know, I end up having a lot of conversations with founders around like more of we go into a little bit of like the mental side of things a little bit. Like, why do you want to build? Why are you building this company? What do you want from it? You know, what are your family plans even? You know, if you're single and all you want to do is make money, then okay, that VC might make sense for you, because you're going to be in high stress situations. You're going to be working a lot. The investors expect a lot because they want to make VCs want to make a return pretty quickly, and
VCs are investors too, right?
They want you to keep making, you want to keep raising and just keep growing and growing.
They're looking at valuation.
Exactly. So, you know, I've had clients come to me that they're like, we want to raise, and once we get into like what they're doing, it's like, oh, actually, you know, we just started this company so that like we can have something we're proud of, and something that we can kind of hand down to maybe our kids. You know, it's like, okay, well, that's not the VC route, and the great ideas that you can do, you know, build the business through, let's just get sales and look at other avenues like bank loans and maybe, you know, if you really believe in this idea and you see it, like, firstly, the founder has to believe in it, right? And if a founder believes in it, then you're going to have to take some of your own risk, which is you might have to offer up some collateral to get a loan so you can hire that developer and build this thing. So we end up, that's a lot of the conversations I end up having early on, especially with a lot of the startups here in Vancouver. And it's a interesting landscape right now too. It's hard to raise. There's not a lot of money being thrown around. So
because of the economy or interest rates?
The economy, I think it's a little bit of the economy. Just VCs have had
as liquid as they were 3 or 4 years ago.
Things haven't worked out. You know, 2020 was a lot of money was being thrown into investment. You saw like, especially there's companies here in Vancouver like Dapper Labs that was raising, you know, 6 months apart, like different, the Series B and a C, I think it was 6 months. It was very close together, and it was like, whoa.
That's a lot of pressure.
crazy.
Sure, it's like crazy to raise all this money, but that's a lot of pressure to like scale at a very short, very short amount of time, right?
If you remember that time, like 2018, 2019, 2020, like it was a celebration when you raised. Where now I think there's been this like kind of come down to earth moment where it's like, okay, you've raised, like now the work starts.
Yep.
And that's really what it is.
Yep.
When you raise from VC that's really the starting point of, okay, now you really have to work.
Yeah. What are some expectations that people should have if they were to get VC money? I think in terms of like how the culture changes or
I think the accounting side of things, like reporting changes, that we've talked about that, but I think it's really, a VC comes in and they have a formula that they know works or they feel works. Yeah. Right? And for them, it's not about, let me like see if this will work for you. And then we'll kind of make recommendations. They're just like, this is our operating system. We know this works. You need to hire these positions. Yeah. We will reach out to our community and find some referrals for you, hire them. It's like very much like you need to, do this way. Yeah. And if it works, and keep in mind, they have 10 other companies that they're doing the same thing with, or even more. And they're going, okay, if like one of those 10 hit, we're good. Yeah. The 9 don't, like your business does not matter to a VC as much as it does to you. To you, yeah. And it never will. And you should never expect it to. Like, don't get butthurt if they're not thinking of your business for more than 20 minutes of their week, right? Yeah. That's literally, they invested in you. They feel like they've done their work, their due diligence, and now it's time for you to make them the money. And so I think that's probably, I think some people might think it's more of might romanticize it a little more than you should. It's actually very transactional.
It is transactional. And you're giving up a big part of your company too. When you raise money, you're giving them a seat on your board, right? So you're giving them control. And I think a lot of founders and entrepreneurs like having, a lot of people start businesses, they want to have their own thing that they're passionate about, they have control over. So giving up control is might not be easy for some people.
I think the other way to view it is like, you give up control. And so it does become like, it's almost more like a job. Yeah. Like you could got see it that way. You got into this to be your own boss, but you're not your boss.
Now you work for a VC.
Yeah, exactly. Yeah. And
but it's the same thing if you were to sell the company to private equity or any sort of exit where, where you're no longer the only person, the only owner or person there.
Yeah, I think you almost have to, like, when you raise from a VC, maybe you just have to be ready to, like, you're not going to be the person to run this company for the whole time. Like, there's going to be, you're going to hand it off to somebody. Yeah. It's not.
So if the founder is ready for that, maybe they're ready to start their next idea. Yeah, maybe that's what they want.
There's founders that are just like, I actually don't really care. I just want to do this for 5 years, cash out. Yeah, exactly.
Start the next thing. Yeah. Yeah. Serial entrepreneur.
Yeah, exactly. That's why you see, like, it works for those folks.
Right. Okay, that makes
multiple ones.
Yeah.
But those, again, few and far between in terms of founders who actually want that as well. They get an idea, they grow this company, they love it. And it's like, you're separating from your baby. Yeah. So again, they romanticize it in their heads. It's hard to, you think you give somebody control that person is going to care. Yeah. That's the other thing. It's just, they don't care, which is fine. That's the way it works.
So AI is like the hottest business topic right now. Everyone wants to know how to use AI. They want to, like, be better at AI. There's like some mystery around AI because it's like rapidly evolving. For us, like, how does AI impact the accounting or finance industry? What do you think in terms of, like, let's start with accounting. How do you think AI is going to affect accounting? I think I made a video back where I was like, AI is going to replace all of our jobs, but that probably wasn't the most eloquent way to put it. Like, there's probably a more sophisticated way that we could think about it. One being that, the other day I was looking at enterprise tool, an AI enterprise tool, and it was able to generate a SWOT analysis for a public company, just right away, just by clicking one button. And it was a really, really good analysis. Like, if you think back when we were in university, we used to have to sit down with like a pen and paper and like think about all of the strengths and weaknesses of this company, right? But now AI can do that for us. I guess that begs the question, what's that going to mean for new grads or people that are kind of just fresh out of university and their career prospects?
Yeah, I think maybe the best way to answer this question is like how I've been using AI in my firm, and it started with introducing it to my team and going, hey, like, here's ChatGPT. Like, why don't you start like using this to write emails to clients? Like we just run an email through it and say, hey, like, how does this sound? You get feedback and then like send it to the client and it would help you, or just prompt it. I need to send an email and these are the points. See what happens. So they started using it in that sense. So I think that's an example, I think, of just elevating everybody. Like they're able to not spend so much time on an email. So that's kind of the time savings thing piece as well. Like they're not spending so much time on an email. They're able to just do it through AI and it's automatic. And I think that's the first layer that all these junior roles can really benefit from is like, how can I use AI to do less work?
Kind of tying back to the very beginning of the podcast where you're talking about, I was just doing AP, entering AP invoices. Like that will probably be cut down or reduced. And so an entry-level grad would be able to come in at a higher level, a little bit more decision-making because AI would have done some of the base work already.
And I mean, you talk about a controversial statement, like I've made some as well around AI. And I think my latest one was like, okay, if you're who should be afraid of AI is like, I was like, if you pride yourself on doing the amount of work you do versus value and impact of your work, like if you're just like, hey, I did like 8 hours and this took me so long to do, it's like, if that's where your selling point starts at, like, and especially in accounting, I think those are the roles that are going to be the first ones that kind of there's an AI agent, for example, that can do that work. You can deploy agents and teach them and they'll just do it. But with accounting, I think, or maybe probably every profession, is that the final touch will always be a human being.
Because it still makes mistakes. Like I still like, especially numbers wise, like I always, maybe it's just my personality. I always go in and like I make sure I check the numbers are right. And it does get things wrong sometimes. So you still have to check things.
But it's not even for errors. It's just like, there's still, if you break down our functions in accounting, they're all still like, there's still an element of like explaining what's been done. Right? Like if you're all the way up to the CFO, CFO is explaining to stakeholders, this is what I've done. So there's still that final touch that I think needs to be human and for a long time. I think for a while, there'll still be that human touch until people start, I think, trusting AI more and there's just, it advances more. Maybe a CEO will interact directly with AI and not need a CFO, but like that stuff is still, I think,
very far ahead.
I think so, right?
Very far
like
ahead.
That's my take, is that it's there's just
what's the world going to be like? Right?
I don't think we'll ever get to a point where computers are talking to computers, and if a CEO is interacting with an AI CFO, then why is there a CEO? I mean, like the CEO, why the whole company can run by a computer. To think of it in that sense is it's quite overwhelming, but I think for now, like really the focus for accounting will be those redundant
tasks, data entry. Data entry is really good. I'm pretty sure you can get GPT to like do entries. Like if you taught it how to do entries, it could do entries. The agentic AI piece is the thing. So that's where like with my firm, I'm not so obsessed with figuring out how to use like the AI component. So the example I like to give is like when email came out. Right? Like we knew email was going to replace regular mail. But we didn't, and then we just started using email. Like it wasn't like you're digging in there like how does it get, I still don't know the crux of how an emails get transmitted. Like I just know that I'm going to be using it. I feel the same way about accounting. Like there's going to be agents doing the work. Maybe I can build that agent, but I think there'll come a point where and there already is happening in a lot of different spaces, and there's some accounting startups that are going to do that, is build an agent specific for accounting, and you can basically train it like a junior accountant. Interesting. But that's something that, again, someone's going to have to train. It's going to take a long time to adopt. Like there are still accountants out there that use paper. Like it's, you know what I mean? Like with every new technology,
I think with AI, it's the first time, agentic AI will be the first time where like accountant preference isn't going to matter as much as just the world's preference. You know what I mean? Like it'll surpass an accountant being able to gatekeep anything as well. So it's just, I think the point I'm trying to make is that I think that there will be there will be a company that will create something for us to use, and it won't be that complex for us to figure it out. You know, like we don't need to be worried about, like, I got to be the first one to know how to use cloud or Anthropic and all the, I mean, I've seen diagrams, and there's accountants out there that are like posting.
I've seen them.
Look what I just built.
I just like built an AI agent for you.
Deal. Like you did it like 2 months before someone else is just going to give it to me to use, you know, like that's like, again, the analogy of email, it's someone going like, look what I built, and now I have my own email inbox, and it's like, yeah, but Google's going to give it to us in a month.
Yep.
So I think it's just being ready and like starting to, for accountants, I think, especially with our firm, but even accountants that are out there in industry, is like really focus on really good documentation of what you do.
Yep. Because
you will eventually teach, there will be some sort of agentic workflow that will do that for you. And so if you've done a really good job of documenting everything you're doing, maybe learn about a little bit about how that documentation will need to look for the agent to take it in and do it for you, all the better. Like, don't get caught up in the how it works.
Well, it's lovely having you here with, you know, my first episode of my podcast here. Where can people find more about you, Pav?
Yeah, I think where I share the most in terms of stuff like this would be LinkedIn. Yep. So LinkedIn is a good place. I do try to post regularly there.
Yep.
And other than that, our website, clearbookstech.com, to learn more about our services and how we can help startups and any business really.
Awesome.